The received wisdom, John, is that if people are making a planned exit from the UAE, families particularly, they will do it in summer when things are a bit quieter and the school year has finished. What do we normally see? What have we seen in years hence?
So normally we do see an uptick in the number of leasing contracts that we sign during the, let's call it the 4-month summer period. And when I looked at last year specifically, to give some numbers to that, excuse me, for June, July and August and September, we saw a monthly average which was 37% higher for the number of leasing deals signed at Espace Real Estate compared to the 8-month non-summer period. So we're definitely noticing an increase. When we look at the data, it supports that. And I suppose it's like you said, a lot of people are arriving and leaving Dubai during that period to coincide with the school year. So yeah, we see more deals. The question is, do we see greater pricing?
Are we likely to see the same sort of churn this summer? Speaking to a hotelier yesterday who was saying that it's almost impossible to predict from a hospitality point of view what this summer might look like, because COVID obviously has thrown everything up in the air for the last couple of years. What are you seeing already in terms of listings for leasing? What kind of sense are you getting?
Yeah, so I feel like this year is going to be following the same trend that we've seen so far, which is we're seeing a lot of tenants renewing their rental. They're renewing their lease. And that's because prices have risen so dramatically. So the concept of someone upsizing or downsizing in the rental market, it doesn't really make financial sense anymore, because someone, let's say, who wants to downsize and save some money, you could downsize to a smaller property, but you'll be paying the same price because prices have moved up. So when you renew, you get to benefit from the RERA rental cap that is in place to support your previous rent or to protect you against these increases. So it makes a lot of sense, if you can, to stay where you are.
Remind us of where we are with the rental cap at the moment.
So the rental cap, basically, without me going into all of the different bands, it's trying to create social stability. It's trying to allow you to stay in your home without you experiencing, let's say, a 50% increase in your rent from one year to the next. So if the market moves dramatically higher, as it has done, and we are renting some properties today for 50% more than we were renting those same properties for last year, the rental cap softens the blow for you. It means that you won't experience such a large increase if you come to renew that rent, which allows you to stay in your home without being subjected to the huge swings that might exist in the open market. And with that in mind, it then makes sense to stay put. If you were to try and upsize right now, let's say from a townhouse to an independent villa, under market conditions 2, 3, 4 years ago, you would be paying a little bit more, obviously, because you're going for bigger space. But now you would be paying dramatically more. And a lot of tenants would not see that as a reasonable price increase to be paying, and therefore they're choosing to renew if they can.
Which is interesting, because that upsizing was one of the stories of the pandemic, wasn't it? People working from home, kids schooling from home, we need more space, we need a bit of a garden.
Absolutely. And in any market, you see people upsizing, you also see people downsizing. But in this market, because prices have moved so dramatically, tenants are finding that to upsize, as I said, is a huge increase in cost. And to downsize, maybe the financial benefit isn't there because they have to go back into the open market where prices have moved dramatically. They might end up paying the same rent for a smaller property, and therefore, why downsize?
Plus the moving costs.
So we are seeing a lot of tenants that are deciding to renew if they can. That means that there's less stock in the market, there's less churn rate. We're also seeing that, yes, this is the time when people either leave the country or arrive in the country. The question is, are more people arriving than are leaving? It feels that that is the case.
It's interesting what you say there about stock, because yes, churn creates more on the market. Where are we with rental stock at the moment?
It's tight. The market is tight. And if there are certain areas where there will be more stock. If you're looking for an apartment right now, there's more availability than if you were to be looking for a villa. But in well-known, well-located villa communities, the same trend as we've talked about previously on the show, it's very tight for stock. And I don't really think that that's going to change over the summer period. And therefore, I don't see that you're going to all of a sudden find a great bargain in the rental market.
What does the outlook for stock and properties coming on stream look like for the rest of the year, John?
There are some handovers. I asked our leasing team actually what properties are handing over during the summer period, and they replied by telling me that mainly it's apartment stock and it's not a lot of stock. So yes, there is the supply of new properties coming into the market, and that will continue over the year, but I think that demand is going to continue to outstrip supply, and it's all about looking at where is that stock and is that really satisfying the current demand? I don't see a lot of stock being handed over into the villa market, which is where demand is extremely high right now.
What does that mean for the power dynamics between tenant and landlord, particularly when it comes to checks? Because we were, and again back in the beginning of the pandemic, in a space where landlords were becoming a lot more generous around the amount of checks, for example, that they would take from a tenant. Is that reversing?
Yeah, yes, it is. Absolutely. And the market is a cycle. It's always moving in a cycle. 2014, I remember it was very much a landlord's market. You had to pay the price as a tenant. You had to pay one check if you could, or two checks. You had to make yourself competitive. Then we went into obviously a cyclical downturn for many years, and it was a tenant's market. Tenants could negotiate. They held the power. Now it's back to being a landlord's market, and I don't see that changing anytime soon. So as a tenant, you need to make yourself as attractive as possible. That means you need to appear creditworthy. You need to pay in as little checks as you can, and you need to pay the price.
We've got a lot of messages coming in for you about buying, which I know Tom's going to put to you after the news at past. Could this situation, rents going up by 50%, less checks, whatever, push more people into the sales market, John, very quickly?
Yes, I think it is doing that already. And I think that anyone who has the ability to buy, when they start crunching the numbers, will realize that the financial benefit of owning a property rather than renting that same property is high today. There's a big financial gain to be had by owning rather than renting.
Let's just address a couple of those questions before we move on to other stories doing the rounds at the moment. Hey guys, loving the segment. Question for John and the team from Espace Real Estate. Would they advise, is it worth clearing off your mortgage or upgrading to a larger property at the moment?
So, difficult question to answer because there's a few different variable factors that would have to be understood before being able to give the right advice. And the right advice is very much to each person on a personal level. Age would be one thing to consider, and you've got to weigh up the cost benefit of paying off your mortgage or investing that money elsewhere versus what utility value are you looking to get out of a bigger house. But if we look at the concept of paying off a mortgage, when you pay off a mortgage with cash that you've got on the side, you're effectively getting a rate of return on that cash equal to the mortgage rate. So if you've got a mortgage of 2.99% right now, and you choose to pay off some of that mortgage, a 2.99% return over the long term isn't as good as the return that you could get out of, let's say, investing in the S&P 500, which has returned much greater percentage returns than that over an extended period of time. With equity markets at low levels compared to where they have been, I would personally prefer to put money to work there with a long-term view in mind rather than paying off mortgage debt, which is still quite cheap, relatively speaking, and therefore the return on that is not going to be so great over the long term. However, if I was approaching retirement, if I was just about to retire, I would probably go for the option of paying off the debt.
Another question that's come through, John, from Wayne this morning. Are there any rent-to-own schemes available here in Dubai or any other way to get on the property ladder without a deposit or without buying off plan?
Not that I know of. If you buy, what would be close to a rent-to-own scheme, although it's quite a costly way, so I don't think it would actually satisfy the requirement that's being requested. But buying off plan with a post-handover payment plan, but those would still be large chunks of money you'd have to be handing over, so I don't really think it's going to do the job. So not that I know of. Not there might be out there, but not that I know of.
Dubai Eye 103.8.
Join the conversation.